If they introduce an L2, now all of a sudden they become the infrastructure, and then that allows them to sort of monetize all these other things that are likely coming. For example, their expertise as an equities broker. They should be positioned, if they have the infrastructure, to introduce tokenized equities. And then not only do you have the interface, you've got what they're building off the wallets. Now users can transact with equities. And then if you own the L2, then you're capturing those fees.
How about that Bowden investment? Our entry into the meme coin world. How you
feeling
feeling
on that? I got out of it. I basically was watching to see if how it was going to respond during the first debate, and it was kind of like pumping a little bit before the debate started. So got up to I don't know, maybe 17 cents or so. And I sold a little bit. And then when I saw I wasn't reacting, I was like, I gotta get out of this thing. It was starting to drop during the debate. I was like, oh, this is not working. I don't know why it didn't work. It's funny, so many crypto natives were in that, I think, and it just didn't work. I don't know, probably because Biden's demise is kind of sad. It's not even funny anymore. I don't know. I had some Trump too. I got out of that. And I put it into TIA because TIA was down a ton. So I put it into TIA. We'll see what happens. That was one of my worst trades ever.
Yeah, I got wrecked too, but I guess I'm not a good trader. It might be that you're not either that good of a trader, but I'm much better at longer term fundamentals based investing. So maybe we should stick to that.
It forced me to just be what did I do here? Yeah, I had to kind of reevaluate, why did I do that? Small amount of money, but FOMO will get you. FOMO will get you for sure.
It will. But let's stick to fundamentals and hop into this episode here because it's a pretty exciting one. So welcome back, everyone, to The Signal. Took a week off with Mike, and we're back with an exciting episode. Kind of a follow-up in one way to an episode we did a few weeks back about a deep dive into Coinbase, a company that really made it accessible for people to start holding Bitcoin and to add digital assets to their portfolio and interact now with this Onchain ecosystem. Another company that in a bit of a different vertical in fintech had a similar approach, not to crypto, but just general finance, has been Robinhood, that really revolutionized access to financial services outside of just typical bank accounts for retail investors, equity trading, all sorts of more sophisticated products there. And they've really established their name over the years, and more recently have started taking some pretty interesting steps towards the crypto space. And now with some recent acquisitions and other product developments and partnerships they put in place, seem to be kind of on this trajectory to even start maybe competing with Coinbase and all these other more companies that have started in a crypto native way. So I think there's a lot to break down here in terms of their business and what the future direction there could look like. So that's going to be the topic of this episode. I'm excited to start diving in.
Yeah, likewise. Excited to be back. Excited to get into this. It does kind of feel like Robinhood and Coinbase are on a little bit of this kind of collision path. I think both firms were founded in the same year, kind of taking different paths to get to crypto, but excited to kind of get into this. I think we did a great episode on Coinbase, and I would recommend people check that out as well, because we're going to cover a lot of similar topics in this discussion and kind of compare where Robinhood is coming in against Coinbase. So yeah, let's hop into it.
Yeah, let's do it. And let's start with the basics here. So basically the story of how Robinhood got to where it is today. So if you kind of walk through that and the initial vision of why that startup was founded back in 2013.
Yeah, so Robinhood has kind of become one of the most established fintechs, I would say, really emerging. They were founded in 2013 by Vlad Tenov and Baiju Bhatt, hopefully pronouncing those names okay. And they were roommates at Stanford and both worked on Wall Street, building out sort of trading tools on Wall Street for a little bit. And they started to realize that there were sort of these issues with access to finance for retail investors. And that was really kind of the mission of the company when they started was, the name Robinhood is kind of the idea of, kind of taking from the rich and giving it to the poor. And so they kind of came up with this idea that they could offer, democratize access to retail investors, do it with this model where the trades would be free, which was innovation at the time. And it was something that most people, I think in traditional finance, could not understand this business model that they were proposing at the time. It has since taken off, and they've really kind of just focused on retail investors. So the average age of users on Robinhood is 31 years old. So they are definitely a kind of retail focused application and really have that kind of like millennial cohort of users. They have 13 million monthly active users today. So they really kind of grew really like 2018, 2019, and they really kind of hit like sort of an S curve in their growth once they started introducing crypto, which we'll kind of get to the timeline of how they came into crypto. But Robinhood now is, they went public in July of 2021. If it came out at $55 a share, it's trading at $22 a share now. They've got 24 million funded accounts on the platform. Just going through a few of these stats here, they're $2 billion in trailing 12-month revenue. It's up 10% over last year, and it's up 100% since 2020. They are profitable. Their PE ratio is 162, so it's pretty high. $19 billion valuation. And they're trading about $62 billion worth of equities per month and about $6 billion in crypto volume. So crypto is just under 10% of their business today. And we mentioned kind of their business model is focused on zero fee trading. So the way that works is they're selling their order flow to market makers, and that's about 75% of their revenue today. So I'll pause there, and just hopefully that's a decent little overview of Robinhood.
Yeah, that's a great overview. I think all of the key metrics also that are interesting to dive deeper into here. And there are a few verticals that they operate in, like having started with like equity trading, making zero fee trades, and competing against the more existing incumbents that had larger barriers to entry from a user's perspective, to then spanning out to this more progressive form of finance, which is crypto. As of today, how would you define Robinhood's kind of position in the market from a competitive landscape point of view? Who are the main competitors? How are you thinking of that?
It's a good question. So they have really, I think they're the first like sort of brokerage firm that is focused exclusively on retail investors. And so they created a market here, in my view. And the main competition for Robinhood to me is really these emerging like crypto platforms such as Coinbase. Coinbase is obviously not the only large crypto exchange out there. There's Kraken, there's Binance, there's others out there. But when you look at sort of Robinhood and how they're positioned against other traditional brokerage firms like Charles Schwab or Fidelity, much, much smaller, right? So they're maybe like less than 1/10 the size of these companies in terms of the volumes of assets being traded on the platforms, the number of users, the market caps. So much smaller and just really focused on retail. I'm curious how you would think about that in terms of their competition in the market. I mean, they are competing. I think there's, in some ways, they've sort of grown the market by introducing access to a broader audience. So I don't think they're necessarily stealing users from these other traditional brokerages, but really kind of just like broadening access and making the markets larger, I think.
I would agree with you. And I think the average age of users really speaks to that fact, because name another financial service company that's an average user age of 31. I don't think you can. And the way I've been thinking about competition as well is that there are several of these neobanks, for example, take Revolut, which is more accessible in Europe, that somewhat falls into the same category of competition, really low barriers to entry, and start trading things. You can trade crypto there as well nowadays. At the same time, there are certain features that aren't directly competitive to Robinhood, and there's geographical differences on how accessible they are, but kind of in the same bucket. And I would also put Coinbase and the Krakens and others with just different approaches. And I think something we're going to talk about later in this episode is the fact that Robinhood started with equity trading, and now they're going into crypto, whereas Coinbase, because I think that is maybe the biggest competitor at this stage, started with crypto. But if I had to guess, they will inevitably want to move towards equity trading at some point through tokenizing equities, because they're trying to move the whole company on chain. So you're going to want to enable people to start also trading equities through some manner on chain as well. So just very different approaches to potentially, in say like a 10-year time frame, having the same product suite. We'll see how that goes. Maybe from that competitive comparison between Robinhood and Coinbase, could you walk through some core KPIs between those two, so we understand how they stack up against each other in terms of size?
Absolutely. Yeah. Let me share my screen here. And this would be good just to kind of like level set this discussion a little bit around how these two, or how Robinhood can compare to Coinbase and these actually crypto native applications out here. So just a few sort of high level metrics to look at here. We're just comparing Robinhood to Coinbase and Uniswap right now. But in terms of monthly users, so Robinhood has 13.7 million monthly users. I mentioned, I think in the intro there, they have 24 million funded accounts there. Coinbase has about 8 million monthly active users. They have, I think, over 100 million sort of registered accounts on the platform. Of course, those accounts are not interacting on a monthly basis, so it's about 8 million on a monthly basis. And then when we look at Uniswap, Uniswap has seen a lot of growth in this cycle, and they came in at just last month at 6.8 million monthly users. So pretty interesting to see Uniswap getting close to Coinbase and Robinhood in terms of the monthly active users. In terms of like assets under custody, Robinhood has 135 billion versus 106 billion for Coinbase. And this obviously is not like a one-to-one, metric for Uniswap, but we're just taking Uniswap's total value locked there, and that's at 5.5 billion currently. This is, if you're Uniswap, there's not much Uniswap can do with this 5.5 billion that's sitting, that's total value locked. That's really just the liquidity that liquidity providers are depositing into smart contracts that traders then can come in and trade off of. So it's hard for them to monetize, I guess, those assets because they're not really in, we listed it under assets under custody here, but they're really not in Uniswap's custody. Those are really in smart contracts. Coinbase, however, and Robinhood, these are centralized exchanges. And so these assets are basically under their custody. And then that's where, things can get kind of interesting, where they can offer staking services and almost like some of these like more bank-like services and capture, a percentage of those fees. So Coinbase, as we know, is offering staking services now, and we'll get to this later, but Robinhood is starting to move in that direction as well, and they can leverage that $135 billion of assets to do it. So moving on to, just 12-month revenues to Robinhood, a little over 2 billion over the last 12 months. Coinbase, just under 4 billion. And of course, again, Uniswap, this is fees. This is a top line metric, and that's what we're trying to do, a relative comparison here. This is just total sales for Robinhood, total sales for Coinbase. You could look at Uniswap's total fees, similar to total sales. They did 830 million in total fees over the last 12 months. If you want to kind of get into a metric to do like a relative comp here, you can look at price to sales over the last 12 months. Again, we're looking at fees here for Uniswap. So, but it's interesting to see that Robinhood's price to sales ratio currently sits at 9.7. Coinbase is at 13.5, and Uniswap is at 9.5. So Uniswap is the lowest of the three there, which is interesting. In terms of, monthly trading volumes, as we mentioned at the beginning, Robinhood's doing 67.9 billion in trading volume per month. That is, just their spot. They do offer like options as well. That's a much, much smaller amount of volume, but we're just looking at kind of the spot there. And Coinbase is doing about 52 billion. That's on average over the last 12 months. Uniswap comes in at 46.6 billion. If we just looked at Q1 to do some comps, kind of to get a feel for like how things are going in this current crypto cycle, Robinhood did 260 billion in volume. Coinbase did 312 billion, and Uniswap 184 billion. So Uniswap's about 70% of Robinhood's volume today. And then, just looking at valuation off of all that, you've got Robinhood at just under 20 billion. Coinbase is at 54.6, and Uniswap comes in at 7.8 billion circulating market cap valuation. So just kind of interesting to see, it's not a direct comparison with Uniswap, as we know in some of these metrics, but interesting to see the growth of DeFi as it relates to these centralized exchanges.
It definitely is. And just on the trading volume here, for Robinhood, this includes both equity and crypto, right?
Correct. Yep.
Yes. So when we're looking at that, and the previous data point you alluded to, the crypto was around maybe 10% of the total trading volume on the platform. So when we take that, we can see that, okay, in Q1, we're somewhere a bit less than 10 times smaller than the current trading volume on Coinbase. So from Robinhood's perspective, in terms of purely crypto trading, they probably see a massive growth opportunity there. And that might be one reason behind the fact that they've started taking some very clear strides into that space.
Yeah.
I think next it could be logical, because that's what we want to focus on in this episode. And that's the interesting thing, is what does the timeline look like for Robinhood's integration with crypto?
Yeah, that's a great way to hop into this here. So as you mentioned, about 10% of the current sort of trading volume is coming through crypto. So it really started in 2018. As we mentioned, they launched in 2013. It wasn't until 2018, after really that first like bull run in crypto in the 2017 period, I think that Robinhood had to look at that and say, okay, our user base is mostly millennials, and look at this new crypto thing and look at all the volumes that crypto was doing, how many new users came into crypto in 2017. And they just had to look at that and say, wow, like these are our users. We need to offer something here. And so the first thing that they started doing was essentially just planning around how can we offer Bitcoin and Ethereum, trading. And that was kind of the first sort of like dipping their toes into the water. That was only select states that they could do this. In 2019, they officially got their Bit license from the state of New York, which allows them to offer crypto trading in New York. And then, they really kind of got those licenses in place, got that set up during really the crypto winter after 2018, 2019. And then once 2020 came around and COVID, this is when like things really started to take off. So they ended up doing 41% of their business in Q1 of 2021 via crypto trading. And a lot of that was Dogecoin, which is pretty interesting. I actually spoke with the guy that was sort of running the back end of Robinhood at this time as it relates to the crypto markets. And I don't know if you remember this, but like Dogecoin was just ripping during 2021. I think it peaked out sometime in like April or so when like Elon Musk went on SNL, and I think he mentioned Dogecoin on SNL. And it was just amazing hearing what this was like for Robinhood managing all of these trades on the back end. And it was really Robinhood that was just, whenever they would basically put these trades through, they were moving the price just in incredible ways. It was really interesting to hear that perspective from somebody that was sort of managing the back end of all this. But I think this was sort of just an indication, again, sort of a validation to them that crypto is just really popular with retail traders. That's their market. And so they started to kind of double down a little bit there. But it really started with just, hey, how can we offer access to crypto trading? If you were trading on Robinhood in the early days, you couldn't even move your assets, off of there. They didn't have a wallet that allowed you to do self-custody or anything like that. It was really just this initial onboarding point for their retail users. And since that time, they have started to kind of get a little bit deeper into the tech, I would say. So they ended up improving their wallet experience. So now users can actually withdraw assets into self-custody from Robinhood. So they're integrating into the, a little bit more through the wallet stack. They're starting to offer access to DeFi. And they did a partnership just this year with Arbitrum, where they're going to start to offer like Robinhood wallet users access to trading, I believe, via Arbitrum. Dex is on Arbitrum. So it almost looks like they're going to be able to offer their users access to DeFi trading through something like a Uniswap via Arbitrum and via Robinhood wallet. They have also done a partnership with MetaMask, which is kind of interesting to me. So MetaMask users will be able to transact on Robinhood via their MetaMask wallet. They can fund their account through their balances on Robinhood as well and execute those trades. It's kind of an interesting partnership there. And they're starting to get into staking, mostly in Europe, with the staking. So you can kind of just see this sort of progression where they're getting a little bit deeper here. But I'll pause there if you want to kind of double click into any of these areas, and then we can kind of maybe go through and share our thoughts on where this is all heading.
Yeah, let's do that. Okay. And I'm recording this from ETHCC right now, and actually just today I'm wearing a wristband from Arbitrum Day. Pretty much hopped into this seat right after listening to a panel discussion between AJ Warner from Offchain Labs, the head of strategy basically for Arbitrum, and Johan Kerbart, who is the general manager of crypto at Robinhood. And if I compare, for example, the visibility here at this conference between Base and the OP Superchain versus what now you see with Robinhood and Arbitrum. It's kind of one-to-one, and they're completely separate, of course, in separate places. So you can see this competitive dynamic start to ramp up slowly, and both Robinhood and Arbitrum seems like they are taking this very seriously, even though in terms of where they are in this adoption of the on-chain economy and crypto space, Robinhood is much more early than Coinbase, but they are making strides in the right direction. So this is definitely going to develop into something pretty interesting over the next year or two.
For sure. Yeah, no, I mean, it's really interesting to kind of like project out, where this is heading here. And maybe we can get into this partnership with Arbitrum and kind of where this is going and kind of how they might be thinking about like the business model here. I've been trying to think through, okay, so if Robinhood's going to offer their users that are using the Robinhood wallet access to DEX trading through Arbitrum, which feels like that's exactly what they're trying to do here. What does that business model look like? Because today, as we mentioned, 75% of their revenues come from payment for order flow. So, the users are not, paying fees as they transact. But what's happening under the hood is, Robinhood is essentially like selling your trade to somebody else who's kind of front running it, or either they're making the market, but they're in some ways they're, making fees off the bid ask spread there. Which is essentially, when you think about MEV that's happening on chain, it's essentially the same thing. You have trades being executed and there's somebody at the validator level, whether they're a searcher or a block builder, where they can see those trades coming in and they can, front run those trades and capture fees off of that. So if you start to think about this from the perspective of Robinhood with Arbitrum, how does Robinhood extract a fee here? And it's not perfectly clear. I'd love to get your thoughts on this, but if we kind of go step by step here, let's say the user does a transaction, they're using their Robinhood wallet. That transaction is routed through Uniswap, right? So that's where kind of the liquidity is coming from, or maybe it's another DEX. There's a fee that gets paid to the liquidity provider who provided that liquidity there. And then you have Arbitrum, which today is those sequencers are pretty centralized. They can potentially sort of front run that, Arbitrum itself could actually, they're ordering the transactions, so they could potentially, extract MEV there. And that's sort of the question is it's clear that the Arbitrum sequencer gets a fee. There's potential MEV there. You have the LPs within the DEX that are capturing a fee. And then, of course, like when that trade ultimately settles down to Ethereum, there's a small fee, for the settlement. So how does Robinhood capture a fee here? Like, I'm curious, like, what is your thoughts here? Is that something that you think that they're just going to sort of figure it out as they go, and maybe they become a validator or something within Arbitrum, and then that's really how they sort of capture some of these economics? But yeah, I'm curious, like, how you would think about this.
I think they're definitely at the experimentation phase, and based on the information that I have is that as of right now, they've kept all the swaps and kind of interaction with Web3 native things feeless, and that's probably for a good reason, just to get more data on how users want to use this and see which direction they want to go into. But going forward, I feel that the easiest way to capture value from that would be what, say, Uniswap did with now Uniswap Labs, building an interface and adding a fee to the interfaces that they manage. And that seems to be working quite well, because if you look at Uniswap's trading volume, say, over the month of June, just looking at Token Terminal right now, you had about 50 billion in trading volume, where there's a total of fees, so including everything that the users paid, would be 71.6 million. But of that, there's no revenue capture basically there at all yet. But then Uniswap Labs builds their own interfaces that do have revenue capture built in already. And through that interface, over June, they generated $4.3 billion of trading volume, of which they captured 10.7 million in revenue during June, purely. And this has been a pretty recent shift. So I think that's something that Robinhood probably sees, where they could build extremely slick UIs that they integrate into their existing wallet platform for users to then tap into crypto native swaps and capture a fee just on the front end there, because it seems that users are definitely willing to pay for that.
Yeah, that makes a lot of sense to me. And I'm always thinking about, is there something with the wallet as well? And maybe they're able to offer via this superior user experience where they could potentially offer like insurance or something on the wallets, and then that sort of, gives people trust. It forces them to start using that interface. Maybe there's something with, the use of the wallet itself. And if you want to move assets in certain places, there's fees to do so. But you could imagine if they can focus on that user experience and sort of get the users there, then they start to like potentially develop pricing power off of that. And it seems like that's the strategy. It's not to worry too much about, how they're going to capture those fees. It's just how can we start to integrate here and build stuff that crypto users like don't have access to right now. And I think everybody knows that bridging, using Ethereum L1, bridging to L2 to get cheaper fees. This is not a very pleasant user experience right now. So they're probably just going to come in and try to solve some of that. And then, they'll get pricing power if they get enough users at some point. So,
Yeah. Definitely. But how do you think about the payment for order flow business model in general as we move to more of an on-chain economy? And I think it's worth saying that a base assumption usually in our discussions is that we are moving more and more on-chain and for all financial services. So if you're Robinhood thinking of this transition, does the move to an on-chain economy disrupt their existing business model of payment for order flow completely? So are they trying to re-strategize, or is that a model that you think could work on-chain as well?
It's a great question. And I think, if you start with Robinhood's payment for order flow model today, what they're essentially doing is if you compare that to crypto, you have users transacting, and then before the trades actually settle, somebody is sort of putting their hands on those trades. That within Robinhood's, equity trading today, there are large market makers such as like Citadel that are sort of like getting their hands on the trades, executing them before they settle, and there's a fee capture there. And then, so now if you compare that to on-chain, essentially the same thing. We don't call it payment for order flow with crypto, but you basically have a marketplace where there's liquidity, traders coming in, expressing an intent to do something on-chain. And then before that actually settles, before the execution and the settlement, there is somebody ordering the transactions. We call that MEV in crypto, but it's really just people like essentially access to the state, access to information ahead of like others. It's really what MEV is, and that's really what payment for order flow is. So they're the same models. There's just a different tech stack involved. And so let's put it in maybe from the perspective of the market maker. If you're a Citadel, like for you to continue to earn fees in an on-chain world, you kind of need to be down like a validator or a searcher, one of these parties that's like at the block builder level to be able to capture those fees. So what's kind of interesting about crypto is that you're sort of democratizing access. Anybody can do this within crypto. And it seems like in the TradFi worlds, this is more like a walled garden based on regulations, compliance, and relationships with regulators and things like that. So yeah, it's hard. It's not perfectly clear to me, actually, how this is going to play out. I think these large players today, you can see this happening with people like Jump Crypto, for example. They developed a validator client for Solana. So it seems to me, and they're a big market maker. So it seems to me that they can see this coming, and they're trying to position themselves to be able to capture and be one of these entities that sort of routes orders and captures MEV. And a lot of people think that this is actually, that fees are basically going to go to zero on all blockchains. And like the way that these things monetize in the future is just purely based on MEV, purely based on people that want to access order flow ahead of others. And that's how it works in TradFi today. So yeah, curious your thoughts there. It's hard to say like how it's going to play out, but I think the major players have to go to the validator level.
Yeah, payment for order flow is MEV, I think, but now it's just much more transparent in crypto and on-chain, which makes it more susceptible to critique as well, because people don't really like MEV bots. That's something maybe we're trying to extract from the space, but whereas in TradFi, it kind of happens behind the scenes and no one focuses on it, except, of course, Robinhood has got a bit of a bad rep over the years when these things have started coming up, and there was, the meme stock mania where they had to halt trading and things. So even though they came into the market starting as a company with a mission to kind of empower the retail investor, when these things came to light that actually they're monetizing by actually not dumping on, but not helping a retail investor in one way, it gave them a little bit of reputation hit. And also, especially from a crypto point of view, everything that happened around FTX liquidation, that saga resulted in Robinhood actually forced liquidating a lot of sold positions of people who were holding that on Robinhood, which then also got a bad rep from crypto people. So I feel that over the past, say, 2 years, Robinhood hasn't been really the topic of too much positive discussion amongst crypto folks. But something that changed that narrative a little bit was when Robinhood announced their acquisition of Bitstamp, I feel, because previously it had been kind of opportunistically, okay, crypto's a mania, people are trading meme coins, let's list Doge and the things and let's extract value from this trading activity. Boom. But now with a large acquisition of a company like Bitstamp, which is a pretty reputable exchange that has a solid background, people are starting to pay attention that, okay, maybe they're thinking of this more longer term now. So what's going on? I was wondering that, could you maybe break down the Bitstamp acquisition in a bit more detail so people understand what this entirety that they will start integrating into Robinhood really looks like?
They announced this last quarter, this acquisition, and this hasn't gone through. They're expecting the deal to officially go through probably sometime in next year. But they have agreed to terms to purchase Bitstamp for $200 million. Bitstamp's been around since 2011, like even before Coinbase. Their presence is largely in the European markets. They have offices in Luxembourg, in the UK, Singapore, and also in the US. They have a little over 4.4 million users. And so solid user base. They've also focused on compliance and, being sort of forward with regulations. And so it's kind of interesting. I'm not sure if there's some sort of overhang here that makes that purchase price look better than it is. If there's some sort of potential, I couldn't find anything related to any pending legal challenges or anything like that. But you think when you look at the purchase price of 200 million versus 4.5 million users, that's $40 to $5 per user. And when you look at, crypto users and how much they're trading and stuff like that, seems like a great price to purchase Bitstamp, especially in a bull market. Usually these exchanges sort of get into trouble during the bear markets. A lot of the trading volumes drop. Some of them have, done, questionable things with user assets and have blown up because of this. So it's an interesting deal to me to see this. It shows that they are absolutely thinking more long-term. They are thinking about, Europe and how they can access crypto users in Europe. Crypto is very much a global, asset class. So I think it's interesting from a couple different angles there. And then, the other thing is how are they thinking about this in terms of where we're potentially going with tokenized equities? Is this something that they could potentially use something like a Bitstamp to introduce something like this, just because Bitstamp has the, infrastructure built out on chain that they don't necessarily have just yet. They obviously are doing that integration with Arbitrum, so there's a chance that they could do something with an L2 or something on Arbitrum. But to me, it just signals to me that they've identified crypto as this very strategic element of their business. We mentioned it's 10%. Currently, it got up to 40% in the last bull run in terms of their top line revenues. But this is very clear that they view this as a high growth area for their business. And, it'll be interesting to see, and we can speculate a little bit, where the types of kind of products and integrations we think that they may start to move in as well. So
yeah, let's do that. At face value, $45 per user sounds very cheap because I've paid $45 for several swaps on Coinbase before I learned to use Coinbase Advanced. Just the normal UI, I brought the company a lot more money than that, so it sounds like a good deal.
I agreed. I think every retail user on Coinbase has paid similar fees. It is nice that they have that advanced feature, but it's still, I mean, it's still, if you're doing any type of volume on there, I would be actually curious to see what Coinbase's unit economics are compared to somebody like a Robinhood. I actually think Coinbase's are much stronger, even with Robinhood's payment for order flow model. But yeah, maybe we could talk a little bit about like just tokenized equities and what this could potentially look like, and like how Robinhood could potentially try to position themselves for this. And maybe that's jumping ahead a little bit. Maybe they're going to focus more on sort of these crypto native things first, like staking. And we are seeing them, they did just get some licenses to offer staking in Europe as well, not in the US, but starting in Europe. But I guess from your perspective, maybe I'll ask you, what do you think is like the most strategic thing for them to be thinking about as like the next move here?
Yeah, so as I'm thinking of it, I feel fintechs have had a lot of trouble monetizing. I feel in the long run, like a bunch of fintechs have raised incredible amounts of money, but then had a lot of trouble building any sort of sustainable businesses. And Robinhood for sure has been part of that category as well. Of course, they've managed to get their economics into shape, so it's not like a horrible business, but I feel they could be doing a lot better. And they are most likely looking at something like Base at the moment, with Coinbase's move to an on-chain economy, that where Base's sequencer over Q2 has generated $24 million in revenue with pretty small user activity still. Yep. And these are just the first steps in allowing Coinbase to move their whole business onto on-chain infrastructure that Coinbase essentially would own, so they have full control of how they do it, and they would be able to capture value in all different parts of the stack, which would make the economics of running a fintech business, in my mind, much more lucrative. So how I'm thinking about what Robinhood's strategic moves probably are right now, and they have to be having these discussions because they're seeing what's happening with Base, is that how could we do something similar? And this relates to your point on tokenized equities as well, because I feel that's just kind of a regulatory issue at the moment that's stopping that. We probably would have tokenized equities already because it just makes sense if there weren't so much regulatory concern and uncertainty around it. But from Robinhood's perspective, another reason why they're probably working with Arbitrum is because they do see the potential benefit that would come with launching an Orbit L2 that Robinhood would own for sure. And that would then help them become a developer platform, because that's what Coinbase is doing with Base. In addition to just having your own company, you can launch your own developer platform. There was over 6 million contracts deployed over last quarter on Base. 6 million. And they're doing a lot of work to attract build. There's a really vibrant builder ecosystem that is expanding essentially the Coinbase ecosystem by miles all the time. And that's something that I would think strategically Robinhood is eyeing and thinking of how could we do something similar to expand just outside of our core business that's limited to kind of one business model right now, and start really building a developer platform that enables us to think of things more cohesively.
Yeah, I think that I couldn't agree more. It just feels to me like that is sort of the nexus of where they need to be focused, because it just drives all these other things. Like we were just talking about, how are they going to capture fees, and how are they going to sort of position themselves to do it? To me, you have to own the infrastructure here. In their model, their existing model, they don't really own the infrastructure. They own the user interface, and then the market makers are kind of like the infrastructure there. And the market makers are paying for access to that, and they're sort of splitting the economics with the market makers. If they introduce an L2, now all of a sudden they become the infrastructure, and then that allows them to sort of monetize all these other things that are likely coming. For example, their expertise as an equities broker, they should be positioned, if they have the infrastructure, to introduce tokenized equities. And then not only do you have the interface, you've got what they're building out the wallets. Now users can transact with equities. And then if you own the L2, then you're capturing those fees. You're potentially at that level, like we mentioned, that like validator level where you potentially have the ability to order transactions. And you almost, in some ways, it feels if they do make that move, they're potentially cutting out like Citadel and these other guys that they are sharing the economics with currently in a current business model, I have to think, that there's no way the regulator's going to allow them to own the whole stack. So that's the challenge. I don't think that they can own the interface and then also be in control of the market making element of this. So we'll see, regulation is certainly going to play a role there. But I couldn't agree more. I just think that for them, having an L2 and owning that infrastructure, then it enables all these other things that they can sort of leverage with their wallet, with their position in the market as an equities broker as well. I know they're also starting to introduce like APIs where third parties can this is for crypto, where third parties can access data and do some sort of quant algorithmic trading there. This is another potential line of business for them. I would love to see them start to integrate, or think about integrating with somebody like a token terminal to really deeply understand what's happening with like fundamentals and on-chain data. And then that potentially gets incorporated into either whether it's research, whether it's quant strategies, that are being utilized through their application. But it feels to me like in crypto, you want to go to the infrastructure level first. They've proven that they know how to do user interface. So if they can solve the other piece, they're going to be pretty tough to compete with, I think.
Yep. You do want to own the infrastructure. And I think one thing that speaks to that is you have the Citadels and likes. I mean, they have funded their own digital asset exchange or market, like EDX markets. If you remember, there was some media around Fidelity, Charles Schwab, and Citadel funding the launch of that in the US, which is a digital asset market. And of course, it's a little bit different than the decentralized exchanges that we have out there, that it doesn't custody customers' digital assets, but you just have to go through like intermediaries to buy and sell crypto assets, kind of similar to how Trader made on just, like the New York Stock Exchange and stuff. But they are innovating on the infrastructure layer themselves, and they're starting from the very beginning. So why couldn't Robinhood do that? I mean, they have resources to start rethinking that as well, instead of waiting for the Citadels and likes to build their own, and then they keep their position, which isn't that strong of a moat that it could be if they build the whole stack themselves.
Yeah, totally agree. And maybe starting to think a little bit about what are the risks here too. Like when you think about, okay, it seems like they're focused on the Ethereum ecosystem, at least in terms of where they're sort of integrating with the tech stack and allowing their wallet users to potentially access trades through Arbitrum. Now, should they be also looking at doing stuff on Solana? Right. I haven't seen anything being announced just yet. And when you look at Coinbase, they have sort of positioned themselves within the Ethereum ecosystem as well via Base. So this is another interesting sort of subplot to sort of the strategies here, is you need to pick the right L1 to sort of build your stuff, or you potentially have all this technical debt that becomes a problem later on. And it's probably hard to do two blockchains at once. And maybe you could speak a little bit to the challenges from like token terminals perspective, even with integrating with lots of different layer ones. There's different technical challenges. But I think this is something that has to factor into their strategy as well. And they have to be looking at Solana and wondering, is that where we want to go? It seems like Jump Crypto has really said, we want to be on Solana. We believe Solana's sort of where a lot of these financial apps are going to play out. But yeah, curious to get your thoughts there. And then the other piece we should talk about is stablecoins, because Coinbase has a unique advantage on stablecoins as well.
Yeah, good point. In terms of the data, that is an extremely important consideration, I think, and not just in terms of data, but the ecosystem that you want to build on. You want to have the incentive alignment on lock. You need the ecosystem and you need the partners you work with to need you as well. It needs to go both ways. And I was just having a conversation with Cosmo Zhang from Pantera about their Pantera's investment into Ton, the open network, which is the biggest one Pantera's ever made, and said the biggest thing that interests them in that investment is the fact that strategically Telegram needs Ton because they have this community platform that they haven't really been able to monetize properly, and they can use Ton to build it into a developer platform and a financial services company at the same time, which would make Telegram's business great. And then Ton, as a blockchain, they need Telegram for the distribution. Yeah. And I feel this sort of similar interplay was in place with, OP, the superchain, and then the brand Coinbase, combining their efforts. You get the crypto nativeness and actual on-chain economy coming from OP, and you get the trusted distribution and brand that Coinbase brings, and that works together. And when Robinhood is thinking of this, I mean, yeah, they don't want to go and pick the same route that Coinbase did, but I feel like Arbitrum needs a catalyst right now. They've kind of fallen behind in this L2 competition, at least in terms of narrative. So I feel Arbitrum needs Robinhood. And right now as well, if Robinhood really wants to integrate themselves into the crypto space, they kind of need Arbitrum or someone else. And picking EVM is probably the easiest. And I do feel that in terms of network effects, it probably makes the most sense as well right now. And what comes to the data that you said, for example, from Token Terminal's perspective, we have integrating EVM chains on lock. So as soon as a new chain is launched, we can have that data up and running and analyzable for both project teams and investors pretty much at the snap of fingers. And there are other ecosystems, like right now we're working on a Polkadot integration that takes a bit more time until we get that on lock. It takes a lot of resource and time commitment to get that up and running, but we'll have that up in the coming months. And Solana, I mean, that's been a pain for all data providers. So lots of considerations, but I feel over the coming years, those things will also kind of even out a little bit and there won't be that big of differences. But a pretty important strategic choice for Robinhood to make who they partner with. Would be interesting to hear the details behind why it has been Arbitrum back then. I think one big reason was that is the biggest L2 by TVL. But yeah, there are probably a lot of other ecosystems out there as well that would love to get in bed with Robinhood. So we'll see if they start experimenting with other ecosystems as well. It could be.
It's possible, yeah. It's worth noting that Solana, I believe they launched just before COVID in 2020. So they've really only been around for just like over 4 years. Like you mentioned, it's hard to get data. I struggle to get really good data on Solana. It is building out these network effects, but there is some path dependency in terms of these L1s and the network effects, the users, the developer tooling, and all of this. That does really matter. And this is like something we talk about a lot, is just who's going to be the ultimate winner, in these L1s. And when you see that like Robinhood is starting to invest within the Ethereum ecosystem, we've seen it with Coinbase. It's even though Ethereum has these challenges, when you see these things happening, you can kind of almost start to project out that they're going to be solved. And so even though there's other blockchains that do things better than Ethereum or have better UX and different things, it's still not a slam dunk for them to be able to compete, for Solana to win this race, because of sort of the inertia that's just sort of built around the EVM today. So maybe one way to close out this conversation a little bit too would be to sort of compare. We've talked a little bit about how Coinbase is approaching this from a slightly different angle than Robinhood as a crypto native app. I think maybe we could go through just like, what are some of the strategic advantages that we think Coinbase has today versus Robinhood? Because they are kind of coming at it from like different angles. I think maybe to kick it off, one thing that I think is really interesting with Coinbase is not only they're building the L2, but they have this partnership with Circle around the stablecoin. So that is, to me, those are the two areas where Coinbase has like a pretty strategic, unique advantage. And the stablecoin might be harder for Robinhood to actually break into, but there's no real moat around them potentially building a layer 2. But yeah, I'm interested to get your perspective there.
Yeah, the stablecoin one is interesting because Coinbase kind of has Circle by the balls, if I've understood it correctly, with the deal that they have in place. And I think it's a good synergetic partnership, so they probably don't see it that way themselves. But Robinhood is also offering, I think, like 15% interest if you hold USDC on Robinhood right now. Not for all users, but they have like terms around it. But they are also incentivizing users to purchase USDC and hold it on Robinhood. So I don't really know what the game plan there is, because I've also been thinking about the fact that they would most likely want to build up that kind of payments infrastructure themselves as well when it comes to stablecoins. Tether has established itself on other ecosystems. Circle's in bed with Coinbase. So what does Robinhood do here? Do they partner with a new up-and-coming stablecoin and really try to push that? Could it be like, I don't know, Mountain Protocols, MUSD, which is kind of trying to tap into kind of Circle's and Tether's market share, or something newer like Agora, which is launching? Who knows? But that's also an interesting strategic consideration that they do need to make. And another point that I was going to make on just how these two companies compare is that I feel the Robinhood even has a strategic advantage at this stage, given that they started with equity trading. They have more users right now, and the user profile that they have, we typically think of who trades crypto, are people who probably have traded stocks or equities beforehand as well. So there's a much smaller barrier to getting someone who already holds equities on Robinhood to start also trading crypto or holding crypto on Robinhood, compared to where Coinbase, first off, has much more friction in getting someone to download a separate app separately for crypto, where they can't trade equities or do any other activity on that. It's not a bank account or anything like that. Yep. And also, I feel like from a regulatory perspective, it's going to be harder for Coinbase to get all of the permits to start enabling equity trading on their platform. So in that sense, it feels like Robinhood can move a lot faster in integrating crypto and tapping into that market because they already have equities on lock, versus for Coinbase in the opposite direction, that's going to be much tougher to do. And they would probably do it through the on-chain approach. It's going to take a much longer time.
I agree with all that. And I think what's interesting on the sort of tokenized equities element, we talked about how, Robinhood's mission is, and it's right in the name, is to sort of like broaden, access for the little guy to be able to access finance. And they have done that, and they've done it with a great user experience that retail investors obviously appreciate because they've got a great user base. What's interesting with like tokenized equities is maybe that actually fully comes to more fruition, because with tokenized equities, you could potentially allow anybody around the world to access Apple stock without, you don't have to set up potentially not have to set up a brokerage account. Well, if you have a MetaMask wallet, you could then, because they've done this integration with MetaMask, I'm just kind of thinking out loud here, but if you have a MetaMask wallet and that's not setting up a bank account, anybody can set that up. And then you got some stable coins on there, you could potentially trade equities through Robinhood. And now you've like really opened up capital markets in ways that were not possible in traditional finance. There's definitely some regulatory, challenges, I think, around some of those models, but pretty interesting to think about like a MetaMask user, like being able to buy Tesla stock or Apple stock or Amazon and hold that in self-custody. Pretty interesting. And then just have stable coins as well. So yeah, that could be like this, maybe this sort of mission really starts to come together once they introduce on-chain tokenized equities. But yeah, I think this has been a great conversation. There's obviously other challenges outside of Coinbase. They're going to deal with, some of these traditional larger entities like the Fidelities of the world, also, going crypto native as well. So there's certainly plenty of competition out there for Robinhood, but definitely one that we're going to be watching.
Yep. And I like this, a bit of a speculative episode on what could happen and what Robinhood could be doing from a crypto perspective. So we'll see how well our predictions, and if we were in charge of strategy, how aligned we are with Robinhood's team.
Yeah, hopefully leadership's listening to this. Feel free to reach out to us. And happy to have a conversation and talk on-chain data and anything else as well. So
100%. This is great. And I mean, we'll see everyone again in 2 weeks, and we'll have some good stuff in store again.
Yeah, I'm excited. I've been sharing some like somewhat controversial tweets, I guess, around sort of traditional finance metrics and trying to sort of back into like really just raising the question of like, how should we be thinking about crypto assets related to some of these other more traditional KPIs and stuff. So we're going to have a great discussion around some of those topics in a few weeks. So looking forward to it.
Awesome. Thanks, everyone.